Today is April 27, 2:46 p.m. Amazon will be reporting earnings after hours. So, in this video, we will first identify the unusual options we saw on Amazon today, and then number 2, analyze them to see what the large institutions are doing, and third, we will set up a trade based on the unusual options and show you what our earnings trade is. So without further ado, let's get right to it. As you see, Amazon has rallied 4.5% today. And when we look at the options chain, you'll see here we have these 120 strike calls for the May 19th, 14,000 of them. We believe this one is selling the calls at 120 strike calls. But one of the most significant ones are these 95 strike puts here. You see on April 28th, you see 1253, 1240, right? And for this, we believe these amounts here, these are, although it looks like it is being sold, and that it could be moderately bullish. When you look at the chain, actually, what we saw was that not only was it being sold, which we are also doing, but the 100 strike puts were also being bought. Okay, which is what we are also in this position. And so when you buy the 100 and you sell the 95, it's actually a bearish spread that you see here. Okay, and so that's one thing to keep in mind here, that this is bearish. And because these 100 strikes here, which is very high volume at 42,000, much greater than this one, and also greater than the open interest, but this 100 strike is not showing up on the tape. You'll see here you don't see much of these 100 strike puts. And so that's why having very careful analysis and monitoring of this activity, you find these things, and that's what we do. So make sure you are subscribed so you can find out what else is going on behind the scenes. The other unusual option activity was this at 2:03 p.m. You see this one here for April 28, 2,500 of them. You see this, buying the 105 strike puts and selling the 117 calls. When we look at it on the call side here, you'll see the 117 strikes over here. Volume is greater than the open interest at 10,000 compared to 4,000. We believe they sold the 117 and then they bought the 105s. The 105 is also greater than the open interest. And so what they did was created a synthetic bearish trade. And so this is what it looks like. This is the synthetic trade. Basically, if it goes down, it will profit because it is above that zero line of profit loss at current price at 109. And if it rallies, there will not be much of a loss unless it crosses about by expiration by about like 116. The losses are at that 62, you'll see here, and that's tomorrow expiration. And so for our trade, we did something sort of similar to this. And so this is what we did. We sold a call spread, and instead of something like that where it's selling it without buying it, this is when you're selling that 117 call, that's selling a naked call. But we wanted to reduce that buying power. And so what we did was we sold the 120 strike calls, and then we bought the 125s. Okay, and so that gives us that 50 credit, right? And we use that credit to then buy that 100 strike put, which we were showing a little earlier, was also about $50. So that's why this is sort of near zero. We actually collected a credit for our trade when we did it at a better price earlier today. When we did it, it was definitely not a debit. So let's say it was zero, or actually it is zero now. So this is what it looks like. Basically, the trade here it expires on tomorrow, and so this is our break evens here by expiration. It is basically you'll see here $100 is our break even here, and 120 is also our break even. So the price at 109 can move all the way up or all the way down. We will break even and be at no losses. And the only way we would be at a loss is if it breaks 120, right? So this is below this zero profit loss here. So if we look at the charts, we can see that 120 is all the way up here, right? So last time Amazon earnings, you'll see here, this is the last earnings, it did not even break 120. In fact, it only came up to about 114. So this would have to rally past 120 for us to be at a loss. And so as long as it drops down or makes any kind of downward movement, we will be profitable. And this is why we like this trade. This trade is the probability based on the statistics are in our favor. You can see here that at expiration date, the probabilities of this happening is pretty much very close to zero. You see, this is the probability line where you can move this to see at expiration what is the probability of this happening, right? And so that's why we like this trade. It does take 500 buying power because when you're selling a call spread, this is $5 wide. However, you can adjust your call spread on the call side here based on how much buying power you want to use. So let's say you adjusted, you sold the 120 and you bought the 122, then that's a $200 buying power trade. Okay, so that is basically what we are doing for Amazon based on these unusual options that we saw today, and also for the past few days ago prior to earnings, we've been monitoring Amazon and looking at where the large institutions were placing their trades. So again, if this was helpful, please smash that like button and please subscribe if you haven't. If there are any changes that we see on the last hour on Amazon, make sure you have that bell icon clicked so that then we will notify everyone that something else unusual came up that maybe is very bullish, or maybe they closed their trades on their bearish positions. Many things could happen with these large institutions, and so make sure you have that bell icon clicked and you get notified.